It's amazing. I've just never really learned a ton about the stock market
That's what training like seminar hotel after what's his name? Well, no, I'm going to this.
Tony Robbins.
Tony Robbins.
Yeah.
I signed up for one of those.
Yeah. Tony and I've done work with Tony a couple times.
And O'Leary was like the face of the thing. Is that?
Yeah, so you must have went to one of our things.
That was the previous company.
Yeah.
Yeah.
Was it?
So that was a company that hired me to be the face. So Kevin and I would travel around
Okay.
and I would,
Did you speak at one in Salt Lake? I wonder if you.
I don't think I've ever
It was Tony Robbins in 2017.
Was Gary Vee there? I think Gary
Gary
Vee.
Vee.
Oh, yeah, I didn't do that. I know what you're talking about. I've never met Gary.
Gary Vee's cool. That dude has a mouth. Though.
He does.
He's
Yeah,
right.
I remember.
He told them to talk. People were like,
I know.
they were like, what's happening?
He does not care.
No, he doesn't.
I'm reading this. I'm actually reading his book right now. That Crush It book.
Is it good?
It's pretty good. Yeah.
I've never read any of his. Not that I curse a lot. I mean, when you work on a trading floor.
Yeah, I bet.
I mean,
New York.
Yeah,
Yeah,
New York. My poor mom. She's like, hey, my mom's Catholic. She's like, I raised this beautiful Catholic boy who has a terrible. Yeah, we'll get started. We'll give it 5 more minutes.
We'll get going. Oh, thanks.
Thanks so much for being here, Joe.
Yeah, no worries. Joe, I can't wait.
Camera here.
You guys ready?
Were you able to find a babysitter?
Yes.
Okay.
All right.
Sorry, every time.
Let's get started. Thanks everybody for being here tonight. This is a unique opportunity. Obviously, we've been doing these personal development trainings for the last few months, one a month, but tonight's opportunity is really exciting. We have here with us Jeff Tomasulo, who came out from New York, first of all, from Connecticut, where he lives, and he's here to teach us. And for those of you on Zoom, participate. If you have comments, questions, please share. Let's see, just quickly for those that are here from, we're not going to do any like announcements or anything, but we do have our leadership training on Saturday. So those that are aware, and then we'll do another sales training next week, Wednesday.
Next Wednesday night.
Next Wednesday. So plan on that.
That'll be our last one before.
Last one. We're going to be out knocking doors. Some of our teams in about 10 days. So
10 days.
close. Yeah. First week of April, we've got some guys starting. So I'm going to read a quick introduction about Jeff, so you guys can understand a little bit about his background. So Jeff Tomasulo is the CEO of Vestibula Capital Management and the co-founder of Tactical Income. You got to start on Wall Street, trading at a pioneering firm in the world of proprietary trading. He later helped launch another firm, which he sold before founding Vestibula Capital Management. He's an expert in statistical analysis and risk management techniques. His expertise is regularly sought in financial media by names including CNBC, Reuters, Bloomberg, may have heard of them, Cheddar TV, and others worldwide. So I'm not going to waste any more time. I'm going to give it to Jeff. So, give him a hand.
Obviously, I talked to a bunch of you guys beforehand, so that was nice. And I also want to thank Dave for inviting me out here, because I wish I could have been your age, right? You guys are all ranging from 18 to 25, and be able to hear what I'm going to share with you tonight, because a lot of you, I'm hoping, and I'm sure Dave is hoping, that you're going to make a lot of freaking money over the next 3-4 months. And the key is, what are you going to do with it after that? And I'm sure there is a ton of information out there, right? You can go online and you can read about it. And maybe some of you guys have people in your lives that, have ideas of how you should invest the money and where you should invest the money. And and a lot of them are probably good, right? People invest in real estate. How many people here invest in real estate? Right? How many people own their own business? Yeah, kind of, right? You guys are all self-employed.
Yeah, we're all independent contractors.
All independent contractors. So you really do own your own business. And not that those are anything wrong with doing that, but like one of you guys brought up is that you are in real estate a lot. I want to open your mind to another way. And before we start that way, but I have to do this. I hate doing this. Is you have to put up put it this, the disclosure, right? The government makes me do this because they basically say they don't trust you with your own money, right? And that investing in options or investing in the stock market or investing in anything is extremely risky, right? Options are involved risk, and you should obviously educate yourself. And I agree with all this, but I also know you guys take your, personal responsibility, right? It's not what I'm going to share with you. You're going to be smart with your money. So we have to get with that. But before I go, I want to ask you guys a question. I'm going to do something. I'm going to take out $100 bill. And whoever can answer this correctly, the first person to answer it, will get this $100 bill. All right?
That includes Zoom, so I'm watching the chat.
Yes, this is a Zoom. Here's $100.
Yeah, we'll get it to you.
Yeah, we'll Venmo it over. There is a tool that not every, but most super wealthy people have used to create their wealth. Can anyone tell me what that tool is? Close. Close. Close.
We got a response on Zoom. I think it's the right answer.
What'd they say on Zoom?
This happens to be a student of yours, I think. It
Oh,
works for us. Sam's camera cheating.
that's not fair. That's not fair. But I will send him $100.
What's
But don't say it out loud. I want to see.
So,
But he got it. All right, tell him we'll Venmo him $100.
Yeah.
But that's pretty funny. So he is
from Zoom gets the answer.
he knows the answers I talk about. If you're a student of ours or a subscriber, I talk about this a lot because it is what truly has made, me working with all these wealthy people my whole life and seeing I have clients that are billionaires. I was like, how the hell do they make so much freaking money? Like how? I can't, and we're gonna hear my story in a second. They invest, yeah, but how do they invest? What tool do they use to invest? You all use it when you buy real estate. You're a real estate investor. How can you go and buy $1 million home with such little money?
Leverage.
Exactly. I'm not gonna give them $100. But
Is that what you meant by debt leverage?
Yeah.
you know what?
Yeah,
I'll
'cause
give you
it-
$100.
Debt, instead of debt, the other word is leverage. That's why I said debt so fast. I just couldn't think. of
Debt,
the
right?
word.
You were
Yeah.
close, right? Because that's what they use. So they don't use debt, but they
Right.
use
Leverage.
leverage.
I just couldn't think of the other word.
Right. Close. But think about that, right? And it's in my business, it's such a dirty word. And why is it a dirty word? Because of this. Because they need to have disclosures out there because they're so afraid of people taking their money and using it improperly and losing all their money. You hear about this, right? You hear it all the time. Hey, my uncle invested in soybeans or oil and he lost $5,000. Or, hey, my uncle, went and tried to do options and he lost his whole account. And I laugh when people tell me that. You know why? The reason they lost their account is because they didn't have the proper education, right? Like if I go out and I try to sell pest control right now without any education, I'm going to be what? Horrible. But leverage, guys, I cannot stress this enough. It is something that you need to learn how to use, and we use it every day in our lives. We use it when we take debt out, right? Anything, whether you're buying a car, that's not good leverage, right? Some cars hold their value better than others, but you're using leverage. When you go and buy a house, you use leverage. So leverage is something that we're going to talk about today. I'm going to teach you a little bit about leverage and how we use it in the financial markets. But the other thing I want to point out, if you look at every wealthy person, when people are like, hey, Bill Gates, Bill Gates used leverage. He had a great idea. And what did he do? He went to the public markets, right? And was able to raise capital, which was able to help him leverage his business and build Microsoft. All public companies do that. So everybody, whether you're in real estate, whether Warren Buffett, Ray Dalio, you ever hear of a guy named George Soros? There's this guy he's on Wall Street, he's a billionaire on Wall Street. There's a famous story about him where he actually made $1 billion in a day. And I was like, well, at first you're like, oh, that sounds so great. How did he do it? He did it by using leverage. So if you want to be able, no matter where you're starting, whether you're starting with $100, $5,000, $100 million, if you can use leverage, you will be able to grow that so much quicker than you would if you were just using regular cash. Does that make sense a little bit? All right. So I'm glad he got it. Some of the tips for today, right? I want you guys to take notes, whether it's on your phone or on a piece of paper. I should have brought books, Joel. We should have next time we know to bring notepads. Because to me, there's a lot of tidbits that I'm going to share with you tonight, right? And I know that it's going to change your life and it can change it today. Some people are going to be really into this and they're going to start to be able to use this immediately. Other people in this room, it might take 6 months. It might take 2 years. It might take 10 years. You're going to be sitting one day somewhere in your life. And you're going to say that fast talking New Yorker in Utah that I heard speak 10 years ago. You see, he talked about this and I should have done that. Oh my God, I should have taken action. So the stuff that I'm going to share with you, I think will absolutely be able to change your life. So my promise to you, the other thing I want you to do is write down as many questions as you can. Or because we're such a small group, ask me anything you want, right? Because to me, I mean, if you want to know where I get my shoes, you want to know how tall I am, anything, nothing is off limits. I am as transparent as you can be with people because I have nothing to hide. So, and if you don't want to, if you're embarrassed to ask and you have questions when you go home, write down or put in your phone, support@tacticalincome.com, because I will answer anything. I'm pretty good at it. Sometimes it takes me some time to get through. The other thing I want you guys to do is 2 decisions I want you to try to make tonight. One, I want you to make the decision, do you want to learn how to make money in the markets? And then the second decision I want you to make, do you want me and my team to teach you? So other questions I'm going to ask right now, and I want it to be interactive. How many in here know what a stock is? Can I know what a stock is? Raise your hand. You don't have to be shy. And if you don't, you can go like this. So I kind of know what a stock. Do you know how to trade a stock? Anybody trade a stock in here? Does anybody have a brokerage account? Raise your hand if you have a brokerage account. Nice. All right. Some of you do. All right. Now let me ask something. Joel, I never even thought about this. How many have been really successful in making money in the markets? So?
Not options, but yeah.
Buying stock?
Yeah, buying stocks.
Good.
Yeah.
All right, awesome. And I'm just trying to get a good feel because, again, I want to open your eyes to a whole nother way. If you're good at buying stocks, I'm going to show you a way that's going to blow your mind on how to use your capital smartly and how to leverage to make more money. So my name is Jeff Tomasulo. I'm the co-founder of Tactical Income, which is an education company, right? One of the things why I founded Tactical Income was because I wanted to be able to teach people like my mother, like my sister, to be able to invest the right way, their way, right? Because there's so many things on the internet, right? And there's so many ways that you hear about investing, but there are a month to pay my car payment. Guess what? You can do that in the markets, right? How many people have heard of side hustles, right? Side hustle.
Yeah.
How many people use the stock market as a side hustle here? Right there. All right, one person, that's pretty good. But imagine thinking about cash flow, right? So I want to kind of, get you guys to think outside the box. That's why I created Tactical Income and to give people the support that I had on Wall Street. I also founded Pointe Capital Management, which is a hedge fund in Greenwich, Connecticut. We manage about $150 million of really high net worth clients. Like I said, I have a client who's a billionaire. I have a client who's worth $500 million. And then I have my money, 99% of my net worth is in my hedge fund. My partner who helps me run the hedge fund, his family's money, my mom's money, that's how I kind of built Pointe Capital Management using the same strategies and tools that I'm going to share with you tonight. And all the tools and strategies and everything that I do in my hedge fund, all of our subscribers and all of our students get taught, and I share all that with them. But all this, and I've also been, travel around with the sharks. You can see me there with Kevin O'Leary from Shark Tank, Barbara Corcoran, there's Robert Herjavec, him and I on stage. I was very fortunate in my career to be able to meet up with these people and talk about financial education. Also been on shows like CNBC. I was one of the original Fast Money guys back in 2008 and 9. I signed a contract with them to be on TV for about 2 years on CNBC. And then We did, it's a long story. We could talk about that later about something I said politically, and that was it. But then I was able to go on other TV shows like Bloomberg, Fox News, what other ones? Cheddar TV, Reuters, and I do it all now. So I've been very fortunate, but this is all cool, right? This makes my ego feel good, but does it really ever really make me money? Not really, right? And you know, when I talk about my, when you see all these pictures, you would figure that, hey, this is a guy who always wanted to be on Wall Street. This is a guy probably who's really smart at finance. But I didn't grow up like that, right? I grew up in a small town in Long Island, New York. I am dyslexic. I was horrible at school. Math to me was it was like putting nails in my eyes, right? And my father was a corrections officer at Rikers Island for 25 years. I don't know, anybody know what Rikers Island is? It's one of the worst jails in New York City. So he worked there for 25 years. My mom was a stay-at-home mom. My brother, sister, and I are the first generation in our family to go to college. So I never grew up like Kevin O'Leary or Warren Buffett, you know, making trades right out of the womb of their mom, right? They were kind of groomed to go onto Wall Street and make money. But the problem, and this is one of the reasons why I started Tactical Income, was that if you didn't grow up in a household that had money, or someone that had like a desire to own their own business or to invest in the markets, you didn't really get any education. Because if you really think about it, our school system, they don't teach us how to balance our checkbook. They don't teach us how to read a financial statement. They don't even teach us how to do our own taxes, right? We graduate, we get a job, we have to hire someone to do our taxes, especially if you're an independent contractor. And that bothered me because I had a father and a mom that didn't have any rich uncles. My grandfather was a plumber, you know, and my other grandfather was in the military. So I, didn't grow up with this urge to be a Wall Street trader or a hedge fund manager. And again, going back to school, what happens in school? If you're good at something, the teachers kind of push you towards that. So I was horrible at math. So no one ever said, hey, you can go be a banker on Wall Street and make millions of dollars. Never even crossed my path. The only thing I was good at, I had an interest, was history. So the teachers pushed me towards history and, hey, you could be a lawyer possibly one day. If you go to college, you become a lawyer. So that's what I ended up doing. I ended up going to the University of Rochester in Rochester, New York, and I studied political science and history. And I thought I was going to go to law school. My ultimate goal was to go to law school and then go back to Brooklyn, where my family is originally from, and become an assistant district attorney. So, and then one day maybe go into politics. That was my ultimate goal. And what ended up happening was I took a year off to study for the LSAT because I'm dyslexic. So I wanted to do better than I did when I first took the exam. And I took a job down in DC as an assistant lobbyist to this guy who ran this lobbyist group. He was paying me $18,500 a year. So you're paying $25,000 to go to school. Now, this is back in 1995, right? Not prices now. And I'm making $18,000 right after I graduated, $18,500. So I had to bartend and I had to wait tables. And I had a girlfriend at the time who used to fly down from New York. And on Friday nights, where would she have to sit? She would have to sit at my bar and watch me kind of work till 3 o'clock in the morning. And after a couple of weeks of that, or a couple of months of that, she was fed up. And she had a brother who worked at this bank and this trading firm in New York City. And she called him up. He called me up one day and I only met him once. And he's like, hey, my sister's miserable. He's like, I want to offer you a job to come and be my assistant trader. And I was like, he's like, and I'll pay you $75,000. And I was like, oh my God, I'm making $18,500. That sounded like hitting the lotto, right? So of course, I called my father, my brother up. They're like, of course, take it. My whole family lived in New York City. So I'm like, oh, I'm coming back to New York City. Now, I started this job on April 1st, 1996. And I showed up at this firm and he sets me down in a room like this in front of probably about 50 traders. And he starts to explain to me what they do. He's like, hey, we trade the NASDAQ securities. And I'm like, whoa, hold on. I was like, what's the NASDAQ? And he looked at me, he's like, and he said a dirty word. Like, are you kidding me? You don't know what the NASDAQ is? I'm like, no. He goes, do you even know what a stock is? And I'm like, no. And he's like, oh my God. So the reason I'm telling you this is because I knew absolutely nothing. I mean, zero. I didn't barely know what a stock. That's why I asked you guys, do anybody know what a stock? I didn't even know what a stock was. So now I'm sitting at this firm who's they're making tens of millions of dollars a month. I'm this guy's assistant, and he starts to train me. And I need to go to law school now in September. This is April. In that August, I got my first bonus check, right? He gave me money to start trading. The firm gave me money to start trading. My first bonus check for 1 month's work was $45,000. Now, that might not sound like a lot of money to you guys because you guys make a lot of money, but $45,000 back in 1996. What is it, Joel? 82,000 now? Almost 82 now. That would be like making $82,000 in 1 month. And I sat there and I looked at this $45,000 check. I brought it home to my father, who now, by the way, my father was a correction officer whose base salary at that point wasn't even $45,000 for the whole year. And he was like, hey, are you guys doing something illegal over there? Like, how do you make $45,000 in a month?
Classic.
But what I really understood, and I wanted you guys to take this away. When I sat there, because this was a kid who was dyslexic, who had no knowledge of the financial markets at all. But with the right team, right, someone teaching me this specific knowledge, having that support, having the right tools, within not even 6 months, I was making $45,000 a month. And I was like, wow, if I could get that around me all the time, you could do anything. So what ended up happening was the guy who gave me my first job, he wants to leave the firm and he wants to start his own firm. So what he ends up doing, he ends up taking his 7 best traders. And I happen to be one of his best traders at this point. This is 1998, about a year and a half later. And we end up and we go and start our own firm. And we grow it from 7 traders to 175 traders. And in 2001, we sold that firm for $150 million. I was 28 years old and I had 8 figures in my checking account. I thought I was king, you know what. And I'm telling you, that right there changed my life forever, my family's life forever. But it all started with having zero knowledge. Think about that. And how that all happened. So then obviously I took off a year or so and was able to play a lot of golf. And then I went back and I started Vespula Capital Management. And one of the things why financial education, I want to just see why it's so important to me, was 2008 happened. Right now I had some downfalls in there. And one of the reasons why, and I'm going to tell you a story about my ex-mother-in-law in a second, was I started to realize when you accumulate that kind of wealth, and even before I accumulated that kind of wealth, I had a lack of financial education. I didn't have the right people around me. So I kept making mistakes. I kept losing money. I kept investing in deals that went bad, or I invested in people that weren't really good managers. And I had so many freaking yes people around, right? Not enough people challenging me. One of the biggest mistakes that we make at this age, and at the young age that I was at 28 when I had all that money, was, hey, I thought when someone pitched a great idea to me, it sounded good. I didn't have the right knowledge or people to go and challenge that, right? Because you don't want to have all the same people around you. You want to have people around you that are going to challenge everything you do, so you can see both sides of the issues, right? And then you can make a much more informed decision. So I ended up, the reason why it even became more important to me is my ex-mother-in-law came to me, and it was 2009. And she said, Jeff, I need you to take a look at all my financial statements. She goes, I lost way too much money. And she now was a school teacher for 26 years at the time. And I look at her statements, and before in 2008, January 2008, she had $750,000 in all her statements. I was like, holy cow, a school teacher was able to put away $750,000. Now, fast forward to June of 2009, she had $325,000 left. She lost over 50% of her money. And now this was a lady who followed everything that you hear out there, right? she had a financial advisor. And the first thing that came to my mind was like, hey, that financial advisor, you know what her? Because there's no way she should have lost over 50% of her money. And I was like, wait a second. So I'm trying to figure out how she lost her money. And what followed my mind was she followed exactly what you read online or what you hear from the financial advisor. She had that 60-40 split where she had, all these mutual funds and growth, value, bond funds, and all this. She even had money in cash and she still lost over 50% of her money. So I was like, well, if she has all these mutual funds that are supposed to be safe, right? And she's doing it as a long-term investment, how could she lose 50%? So I started to dig in and try to see what those funds actually own. And what I uncovered shocked me. Out of all those, she had like 10 or 11 funds. All of them owned Bear Stearns. You guys remember what happened to Bear Stearns back in 2008, a company that went out of business, right? Or got bought for $1, right? Joel, I think it didn't go out of business. Lehman Brothers, 7 of those funds owned Lehman Brothers, a company that went out of business. All those funds owned Goldman Sachs. All those funds owned GE, right? They owned Microsoft, they owned Apple. They weren't truly diversified, even though she thought she was, right? She had a financial advisor. She was an educated woman, right? But she still didn't really know if she was protected or not. And that's when bells went off in my head when I was sitting there. I was like, holy shit, what if it wasn't, I know, I'm trying. I'm trying.
You're pretty sure.
But I said to myself, if she lost all that money, how many other millions of Americans were just like her and me? Because I was on Wall Street for 12 years. I couldn't figure out, just looking at it, how she lost the money. And I said to her, I was like, oh my God, we're financially illiterate. And I was like, how many more people out there are like that? We all are. Like, and it's not our fault. Like, everybody gets upset. It's like, oh, I should work harder. I should do this. Where do you go for it? Like if you're, like I said, if you don't have that family behind you, or you don't have someone that knows how to do it, has success in it, where do you go? And that's when tactical income and all this became extremely important to me. So my biggest thing that I want to work with, I'm going to get into some crunchy stuff because I want to show you how I do it. Right. And this is what I do for my money, my family's money, and all those wealthy people that give me their money. And because a lot of times, and I'm going to ask you guys, when you have an idea, right? And I saw a couple of you guys get involved in stocks. You have an idea like, hey, this stock is going to go up, or this stock is going to go up, down, or I want to buy this company because it makes great phones, or they make really good hamburgers. The first thing that comes from 99% of the people out there is they're going to go buy the stock. And my thing is, I want you to think differently. I want you to think about, how am I going to take my capital, my hard-earned capital, right? You guys are going to bust your you-know-whats over the next 3 months, right? Or 6 months. Is it 6 months? 4 or 5 months.
Summer break.
You're going to go out there, you're going to get so many freaking no's. And then you're going to start getting yeses, and you're going to get this momentum, and you're going to make a lot of money, right? So when you're about to go and do something with that money, you have to think really smartly. And the one thing I want you guys to think about is, if you're going to invest in anything, if you're going to take anything away from here tonight, is that you want to invest with an edge. And we're going to talk about investing with an edge. But one of the things I do before I invest in anything is, how am I going to take the little amount of capital that I have and make the most money I can, right? I want to risk the least amount to make as much money as I can. So when you're thinking about making a decision in the stock market, most people say, hey, I'm going to go buy that stock. Well, I want you to think in a different way. I want you to think about, how can I risk the little amount of capital and make as much as I possibly can? And there is another way. And then my way is using options. So what we're going to decide, and I'm going to show you guys how, when you have to make that decision between you doing a stock trade or an options trade, I'm going to show you why the option trade is usually 99% of the time the better bet for when you want to risk a minimum amount of capital to maximize your returns. So I'm going to give you a couple of examples here. Now, I don't want you guys to get, when I talk about math, I throw up these crazy looking charts. For anybody who has not looked at this before, all this is saying, and it's a story I like to tell about my daughters. So I have 3 daughters. They love going to Starbucks. Anybody go to Starbucks? Right? You go into a Starbucks for your first time. it is some scary stuff. Because you don't know what a grande or whatever, a mango, I don't know. They have macchiatos, they have all this different language that I've never heard before. So when you're up here and you're looking at this for the first time, don't get freaked out. Because the first time you ever do anything, it's a little scary. And all I'm showing, all this graph is right here, all it is plotting the price of where the stock opened and closed. That's all it is. And you don't have to worry about this. I just want to get through, this is what we have on our platform. And we talk about this later, but this is a firm, right? Anybody have heard of a firm? It's a company out there that allows you to defer payments over time. So our system told us that a firm was a buy, right? So what does that mean? The stock is going to possibly go up, right? And every trade that I'm going to show you is exactly what we did in our hedge fund. These are real trades. These aren't hypothetical trades, but these are real trades. So what I wanted you guys to understand, I have a decision to make. You have a decision to make. Am I going to buy a firm, the stock, or am I going to use an option strategy? Now I'm going to do a hypothetical stock trade because we don't usually buy stocks. And it says bullishness. Bullishness, all it means is stock is going to go up. Okay, we placed the trade on 12/6/2021. We're in the stock, the trade for 2 days. Now, we were going to go and buy 20 shares of stock. The stock price is $103. We bought 20 shares. We invested $2,060. All right, the stock, that gives us the right, we own 20 shares. Now, 2 days later, the stock is at 126 bucks. Like, holy cow, we're going to take a sell, right? That's a pretty big move. We grossed $2,520. We made a net profit of $460, which is a 22% gain in 2 days. How many would love to make 22% gain on your capital in 2 days? Everybody should be raising their hands, right? I'm like, shit, that's great, right? That's really good. However, now if you had in your mind about saying, hey, what is a better way to invest my money, right? How do I risk little capital to make the most? We put an option trade on. I option trade, and don't worry about one option contract. We buy at $21, right? I'm showing you here, apples to apples. We invested $2,100 versus the $2,060. It controls 100 shares. Now, if you guys are smart, what did I talk about in the beginning for the $100 that we got? Leverage. We're going to talk about that in a little bit. 2 days later, it's at 37 bucks. One share, we sell it. We made a gross profit of $3,700. We made $1,600 in 2 days, a 76% gain, using the same amount of capital invested. Which one would you rather do? The option strategy or the stock strategy? Now this makes sense, right? Hey, this is something that I want to learn to do, right? I want to at least know how to do this. So now let me bring up another point here. Now, someone, if you were looking at this, you'd say to yourself, hey, that's not fair. You're controlling 100 shares, but you only bought 20 shares. That's not apples to apples, right? So let's do apples to apples and say, hey, I'm going to go and buy, same thing, everything's the same trade. We're just changing the numbers here. I'm going to buy 100 shares of stock. $100 of stock, I buy 100 shares. Look how much it costs me. $10,300. That's a lot of freaking money to have invested in one stock. There's not many people out there that have $20,000 in a stock account. And if you had 20,000, that means you would be investing half your capital in one stock. It's not a smart way to invest your money, right? That's not being diversified as much. That's taking too much risk. We'll talk about that in a little. But anyway, you own 100 shares. Same trade. We sold at $126. Your gross profit was $12,600. You made $2,300. Same return, right? Now look over here. We only have $2,100 invested. Look at the difference. $10,300 versus the $2,100 at risk. Do you want to risk $10,300 or do you want to risk $2,100? Right? Same trade. We control 100. Those are apples to apples. Sell it at the same price that we did before. We made our $1,600, 76% return. The key here for you guys to understand, again, it's get into your mind
that I don't want to risk that much capital, but I still want to have the ability to make a lot of money. So this controls, again, this shows you a little bit about leverage, but it's also giving you another, no pun intended, Joel hates when I say this, no pun intended, more options, right? Than sitting there and saying, hey, I like a firm, I'm just gonna go buy the 100 shares. And I have to have at least $10,300 in my account, where there's another way. If you learn and get the proper education, this is how you use leverage to be able to effectively and efficiently grow your money really fast. And this is what we do over and over in my fund every single day. So I'm going to give you another example. Now, this is an example of, I put on here because a lot of people love Tesla, right? How many people love Tesla? Yeah. God, I've been speaking for 30 minutes already. Holy cow. I could talk, that's Joel saying 30 minutes. How many people love Tesla? Right? Everybody likes the company. Everybody thinks it's going to who knows where. I hear all these, it's going to be $2,000 stock, $5,000 stock. There's that chart again. It's today closed closer to 1,000, I think. When I took this chart, well, here's my point here. If I wanted to go buy 100 shares of Tesla right now, I have to have $95,000 and $850 to buy that. How many people have $95,000 sitting around to buy 100 shares of Tesla? Now, again, now that you know and you have some knowledge, well, I can go buy an option contract that controls 100 shares for $565. Now, this is not taking a lot of risk on, but if I wanted to, I could I control 100 shares for $1,000 to take more risk to make more money. And I can control that the way I need instead of tying up $95,000. Right? Just having this little bit of knowledge, right? Wouldn't you say to yourself, hey, this makes sense. I should actually start to learn how to do this. Because it obviously, what it does for you is you can start at any price point, right? If you only have $1,000 in your account, you only have $5,000 in your account. It's much easier to start and to make money and to get that money to grow by using options. So we're going to do another example. This is an example that Joel likes to point out because I don't know if anybody follows the market, but if you've seen over the last 2 months, oil has gone absolutely crazy. And you probably see it at the pumps, right? I mean, I guess in the beginning of January, oil was about $89 a barrel. Today, right before I got on here, was $115. It went all the way up to $130 a barrel. While Chevron has been benefited from this. What I want to show you guys about the beautiful part of options is that you can make money when the stock goes down or goes up or goes sideways. And one of the trades that we put on here was that we actually got a signal from our system that we use, and we were able to short or take advantage of oil going back down. And what happened was oil went from 89 to 130 back to 95. Now that's some crazy movement. And people are always scared, hey, am I going to be able to make money in the markets? Well, this is how we did it. So again, showing you, we went bearish, meaning we thought the stock was going to go down, right? And we were able to, here's a stock example, 100 shares would cost us $16,621 invested if you owned 100 shares. We made $133 in 6 days. Not a bad investment for 6 days, not the best. But if you chose to use an option strategy, which we did, one option contract controls that 100 shares, apples to apples. Look how much I had invested. Look how much I had at risk. $1,265. Made that trade. Look at the amount, 9.3% gain in 6 days.
This could totally be an ignorant stock.
No, I love this. Go for it.
I know a lot of people do a lot of this stock trading on like different apps and platforms, right? Are option trades on those same platforms or
Most of them.
different platforms?
Yeah, most of them have. Most of the major brokerages have option platforms that you can trade options. If they have stock, right, Joel? If most of them have, I'm trying to think in my head which does it, which don't. And all the ones in my head, they all have. What's that?
Fidelity.
All have every single one. You can find option trades. I mean, option trading everywhere. Yeah, E-Trade,
Fidelity.
I don't know if Robinhood does it.
Robinhood does.
Robinhood does it.
Yes, that's the whole thing. Robinhood is how a lot of people got themselves in trouble and a lot of people made a lot of money. And that's why knowledge is really important, because to me, what those guys did was phenomenal, right? To be able to make that money. My only argument for all those people that traded all those crazy stocks at the time was they should learn how to keep the money, because too many people gave back way too much money. But if it's there to be made, you want to be able to make it. You had a question?
I did, you're probably gonna cover this, but the
Mhm.
leverage, so on that Tesla one, like, there's a lot of leverage there because they were investing $500, but they were controlling
100 shares.
So there's a lot of leverage there. Can you leverage more than you could, like, compared to a real estate deal in that situation? Like, how heavy can you leverage?
Well, it depends on the size of your account, right? It depends on the size of your account, on how leveraged you can get.
Got it.
Right, I mean, and then it also just depends on
Well, my
your
question is
brokerage.
like, with $500, is there a max on how many shares of the?
Well, the most you could lose is $500,
Right.
right? I mean, am I answering that right, Joel?
My question is, with $500, could I control more than 100 shares? Like,
You could possibly, in certain situations, you could. It'd be very hard to.
what's the math on that? I'm just trying to understand the math on like how much you can leverage.
Go ahead, Joel.
It's gonna vary from stock to stock.
Joel is my head of my education.
So, yeah, I was gonna say, do you mind if
Yeah,
I'm Joel, guys.
this is Joel.
It's gonna vary from stock to stock, so the question is, how much leverage can you get? So the option pricing model, and I don't wanna dive into it too deep right now, because it can get very complex, but it's based on 3 variables: how expensive the stock is, how volatile the stock is, and how much time you have on the options are the 3 primary factors that are involved. And the strategies that we used in the fund, and Jeff's going to go deeper into how the strategies work, but this is what's called a spread trade. And that's how we get a ton of leverage. You probably hear online about people who are just buying options. That's where options actually get really scary. If you're just buying options, that's the leverage that people get blown up by. We're increasing our leverage by using spreads. And I mean, within reason, there's really not much of a limit there. When you saw we controlled $100,000 worth of stock with just $500. And you can't even get that kind of leverage even close to that in real estate.
Yeah, like your question, but feels like a lot of.
It's a ton of leverage, but it's really safe because of the way we structure.
And your worst case is you lose $500.
Exactly.
So that's where you're saying like the downside.
Exactly. Well, that's why I love teaching, especially when we start to, Joel does this, but when I start anybody out. Beautiful part about options is you can limit. Everybody's like, it's so risky. No, I said, do I want to lose $100? Now you cap sometimes your upside, and sometimes you don't, depend on the strategy you're using, but you can actually set how much you're willing to lose on each one of those trades. So the way we teach, and then we'll get into this in a second, it's the way I was taught, right? You start out really small, and we even start people on virtual accounts, so you know exactly everything that's going to happen before you start putting your hard-earned money to work, right? And it's just, it just works really well. You had a question right there.
So if it's so good, why don't more people do it?
If it's so good, why don't more people do it? I don't know. It's a great question because it's difficult, right? People think it's difficult because they don't get the right education. That's the whole thing. When you really start to delve into the options, like I showed you where, let's see if I can go forward, the chart, right? People get, I don't want to go all the way back, but you saw the chart. People get uncomfortable, right? They want to do something that's easier because when you go into, like I do, Starbucks, my first time in a Starbucks, and I see that, I get that anxiety. But once you start learning the language and you understand it, it's really, when you look at a guy like me who has trouble with math, all the computers now, I couldn't have done this without computers, right? That's how bad I am in math. Now we have these algorithms and these programs that allow us to be able to interpret the information that I couldn't have done 15, 20 years ago. Now it's just like everything that you're going to see that I'm going to show you in like 5 minutes, we have all these tools that make it very easy to assess. Hey, should I be using this option strategy? I should be using this option strategy. No, I'm gonna use this one, right? So it's much easier that way, but a lot of people make trading options so much more complicated than it really needs to be. That's it. So, and you tell me, you go through it and then you tell me what you think. You had a question?
I was just gonna ask, what do you feel like is the best way to practice with this?
I feel like.
Virtual account, like Joel and I think it's the most underutilized tool out there. Anybody know what a virtual account is or a paper trading account? Brokerage houses, and we do too, right? Our company, you set up an account with fake money. And it's $100,000, right? You get $100,000 or $1 million. I always tell people start with money that you're going to be trading with, or a little bit more. But I use it totally different than other people. What people want to do, they want to do a virtual account and they want to see if they can make money. They want to try to take this virtual account and take it from 20,000 and go to 100,000. No, the way I use a virtual account is I know if I only have a $10,000 account, I could only put 2 trades on a month. Well, in a virtual account, I could put 30 trades on a month. And guess what happens to my learning curve? It happens so much quicker, right? When I first started, the learning curve was so slow. Now with a virtual account, if I want to learn this one strategy that we teach our people how to use in the beginning, I want you guys to put on 100 of them, because one stock's going to do something else, and you're going to see all the benefits and all the bad stuff that can happen in it. And then you just learn that much quicker. So then you're ready to put your real hard-earned money to work, you know everything that could happen, go wrong, and you know all the benefits and all the negatives. So that's how I like using a virtual account.
So I do trade options, but I've been analyzing everything with more like candlestick charts, rather than any analysis, anything. Is there any analysis platforms you recommend?
We're going to get to that in a second. I'm going to show you my tools that I use, right? I mean, this is exactly everything that I'm going to show you here today is everything that I use in our fund. So I showed you some real trades, and makes me uncomfortable, but Joel makes me do this all the time, is to toot our own horn. So what we do, we have an alert service that we send out to our subscribers, and I'm going to get to that at the end of this, because I want you guys to understand that the way I was taught how to trade and the way we set up our program is exactly that way. I sat behind a trader for 30 days and I watched him, and I fell asleep a lot of times watching him, but I watched every trade he made when he went in and when he got out. So my biggest thing was, how can I do that to the masses, right? I can't have all you come to Connecticut and sit behind me to learn. So how do you do that? Well, you send trade alerts to everybody's cell phone so they can, in real time, so they can see when you get in, they can see when you get out, and then you can teach them on a coaching call why you did it and why you got it, and it speeds up again the process. Because my ultimate goal is to get each and every one of you from being able to have zero knowledge to start growing your account as fast as you possibly can. And how do you do that as fast? And here's a bunch of trades. So these are trades that we put on during the course of last year. I think most of them were last year on this slide. Our win rate, we sent out 175, Joel, more. I don't know how many trades I sent out. I think we sent out 175. Our win rate was 86%. Think about that. No one's impressed with that in this room. 86% win rate. That's like, you guys going to a door-to-door and going to 100 houses and selling 86 houses out of 100. Would you guys make a lot of freaking money? Would that be the top salesperson in the firm if they did that? Yeah. I mean, and to me, these were the great, and there's a reason why, though. And then when you get to hear what I do and how I do it is what's the secret sauce. So one of the things that I want to convey to you tonight is, why did I become quote unquote successful? And I had a lot of failures, right? Like, even if you see that 86% hit ratio, we still fail. We still don't make money. But there are these 4 principles that I live by, because I did in 2008, when I had this really bad stretch, I saw what my mother-in-law went through. I wanted to learn why everybody failed and why people were successful. So I did all this research and I came up with these 4 principles, because all of our successes in this room and all of our failures come down to either we had these 4 principles or we didn't. So number 1, specific education, because everybody on Wall Street, when you think about, hey, I need to be really smart to make money in the stock market, or I need to have this certain education, it's all bullshit, right? That Harvard, Yale stuff, that's crap. Because when you really think about it, when you invest in the markets, or you invest in real estate, or you invest in anything, it doesn't discriminate. It doesn't care about your skin color. It doesn't care about your education background. It doesn't care whether you grew up on welfare or you came from money. The type of education I'm talking about is, hey, I love golf. I want to learn how to hit a golf ball 280 yards. What do I need? I need specific education to do that. If I want to become a great chef, I need specific education to do that. And if I want to learn how to make money in the markets, whether it goes up, down, or sideways, I need specific education to do that. Number two, having the right team around you. When I think about my career, right, I talked about having these yes people around. You have to have the right team. And sometimes you even have to pay to have the right team around you. You have to have the right accountants, the right lawyers, or you just have to have the right mentors, people that have been doing this for more than 2 years. You need people that have been doing this for a lifetime that have the experience that they can share with you. And who cares? I know a lot of people hate when people tell you you're wrong, but you have to hear it, right? You have to hear the negatives. Too many people, again, want to hear too many of the positive stuff. Having the right tools and resources. Now, when I first started on Wall Street, there was a huge difference between Goldman Sachs, Bank of America, JP Morgan, and every other bank out there. They got the news faster than everybody else. They had the better computer systems. They had all of that. But guess what changed all that? The information age. Now, everybody is on a pretty level playing field. You can learn how to trade options in your underwear at 3 o'clock in the morning, watching me on videos or Joel over and over and over at your own speed. You can learn how to hit a golf ball. You can learn how to cook. You can learn anything. You just have to find the right tools, and then you have to learn how to use them. And then the last thing is understanding why. Right now, I know this sounds hokey, but if you don't understand why you're going to go door to door to make that money, after the 4th no or the 7th no, kind of sucks. Right? And it's the same thing about investing. It's anything in life. Understand your purpose, and those tough times are going to be so much easier. I'm telling you guys, this thing here, when I started to implement this, I can't tell you, my earning potential, my earnings went up tenfold. When I paid to start putting the right people in place in my companies, I can't tell you how much more successful I started to be. So if you don't take anything away from tonight, this is another this helps in anything, not just in trading or investing. This helps in every single aspect of your life. So what do you need to know? Well, how to invest when the market goes ups and down. You need to have strategies. You can't be a one-trick pony person, right? One of the hardest things to do is, like I always say, the one-hit wonder. Anybody knows, like the bands that come out, they have one great hit? No, you need to have multiple strategies. You also have to learn to hedge your risk. What does that mean? Protect your capital. Whatever you do, you guys are going to make a lot of money the next 4 months, right? Understand that it might not happen again. Something might change in the world. So protecting your capital is key, especially when you're investing outside of whatever your normal job is, right? Because if you lose it, you have to go back to that normal job to try to remake it again. So the number one thing is always protecting that capital. How to learn how to hedge your risk. All right, this is when I traveled around with the Sharks, and people used to come up to me all the time. They wanted to know, hey, Jeff, when do you know when to buy, when to sell, and what to buy and what to sell? Absolutely key. We're going to go over that in a second. You also must have a repeatable strategy. Again, you don't want to be a one-hit wonder. I hear about these people, they made a lot of money in GameStop or AMC or Tesla, but that's it, but they can't make money anywhere else. I want to be able to do this. I've been doing this for 25 years. Why? Because I have a repeatable strategy. It works in all different kinds of market environments. And then you should always invest with an edge. Even not only in the market, but if you're going to give your hard-earned money to anybody else and they say, hey, I got this great business idea, the first words coming out of your mouth should be, what is your edge? Because everybody has a great idea, right? The next best whatever, but can they implement it? What is their edge? I got in an argument on Twitter with a guy from DraftKings. Everybody know DraftKings, right? It's the sports betting thing, right? This guy was complaining about his company and short sellers pushing his stock down. And my argument to him, well, if your company was really that good, it differentiated itself compared to all the other sports betting places, it would be a lot higher. It wouldn't be the short sellers, right? You need to know what your edge is, or the edge that you're going to be investing in. It is so imperative. This is where I went wrong investing. Anytime I invested outside my fund, I think 90% of the time I lost money. I gave it to other people because I never, especially when I was your age, And I never asked them what their edge was. I thought the idea was great. I even gave an NFL football player, Hall of Famer, Heisman Trophy winner, money to do a deal with Visa, and he cost me $600,000 because he had no edge. It was just some kind of deal he was going to do. Right? Understand, everything sounds so great, but make sure that they have an edge and you understand that edge. All right, well, what is an edge? Well, the way I like to teach an edge is that it's something that gives you an advantage over other market participants. And who has the biggest edge of the world? Casinos, right? When you think of going to a casino, the house makes so much freaking money. It's not the people that come and pull the lever or sit at the thing. Those are the suckers. So in my world, I want to be the house. You want to be the house. Anytime you're investing, whether it's in real estate or in the financial markets, you want to be able to put the odds in your favor. And what we've done at Vespula Capital Management for the last 11 years, right? And what I've been doing for the last 25 years is I make sure when I am going to put my hard-earned money to work, I have some sort of edge. So when you hear James Cramer or you hear a buddy of yours making money in crypto, or you hear something like, hey, I'm buying, I don't know what the new fad is, but you're buying something. Well, again, what is your edge? How do I put the odds in my favor? And that is what I'm trying to do and trying to teach everybody how to do that when they have their money, is put the odds in your favor like the casino. So why trade? Right, these are the biggest questions that I get all the time. Well, in my eyes, you have unlimited income opportunity. You have no boss. Think about that. You can take this anywhere in the world. You can go anywhere where there's a high-speed internet or your phone, right? And trade. And no one's holding you back. The only thing that's holding you back is your knowledge and your bank account, right? Because it does take money to make money. But if you have the right strategies like the leverage, using leverage, you can grow that smaller account so much quicker. And then one of the biggest things I love is you can start with any dollar amount, right? Because you can sit here with $500 and you can start to slowly put it to work. And yes, will it take you a longer time than someone that has $10,000 or $50,000? Yes, right? But you can at least start and learn the skill, because that's what we're going to teach you, and we teach everybody, is that once you have this skill, it doesn't go away. You have a skill and you know how to trade with an edge. And again, hassle-free, and it's proven. You know why I know it's proven? Because one, I've been doing it, but when you look at wealthy people and you look how when they make their money, where do they put it? They usually put it in real estate. If they didn't make it in real estate, they usually put it in the stock market to make money in their investments. And it works over time. So really quick, now we're going to get to more crunchy. I know, Joe, I could talk forever. I went really long putting this poor girl to sleep over here. I'm terrible.
It's anytime I sit still.
No, I'm joking. I was just joking. I didn't know if you were or not.
I'm like,
I do that joke all the
I
time.
wanted to share something. real
Yeah.
quick. So
She gets sleepy when she loves it.
Cam Cheney is one of these, he's in your guys'
Yep.
school. And he started super small with these guys and started with $250, but he's turned that into $4,000 over the last couple of months. So
Yeah.
this stuff works. So
It does work, and it just takes time and the right education.
He was our top rookie last year.
Really, was he?
Yeah.
So anyway, we're talking about options, right? You said I go into Starbucks. This is going to sound a little odd, but I'm going to try, or a little odd to you guys. I'm going to try to keep it as simple as possible. Joel can take this into a whole nother level. I'm going to keep it as simple. There is really just two kinds of options, right? There's a call option and there's a put option. A call option gives the owner the right to buy a stock. So you're going to use a call option when the stock is going up. And a put option gives you, the owner, the right to sell a stock, and you're going to buy a put option when you think the stock's going down. That is really it. And the way you become consistent is you use a combination of these two. And this is how you get your leverage. This is exactly like when someone says to me, I'm going to go buy a stock. You said you've been successful in buying stock. Someone could say, I'm going to buy a call because they're buying a stock. But you're just using that leverage so you'd be able to get that extra oomph in making money and risk a lot less capital, right? And then if you thought a stock was going to go down, like we saw in that CVX, oil was higher. What did I go do? Well, Joel said I put a spread on. Well, I used a combination of the puts. So I could define my risk. So I could only lose my $100 and make my $50 or whatever I made on that trade. So it's just a combination of this, right? And again, anything that you're seeing for the first time is going to be foreign. It's when you go in and you do it every day and you get the right knowledge, right? You get the right team around you, you get the right tools, it makes it much easier. Like me going into Starbucks now, I can order like that for my $3 with no anxiety. So there's two major things that are going to blow your mind, because you're either going to look at this or you're going to be freaked out, which I was for the first time when I saw it. But they're the most two important things that you have to know when you're trading options. And we at Tactical Income have created two algorithms or one algorithm that helps us interpret this. So again, remember when I said, when you get into the math and you get scared of the math like I am, and you get confused by it, we have made it as simple as possible. So the one thing that is the most important, I would say probably the most important thing, right, Joel? When understanding options is volatility. Oh my God, that's a crazy word, right? Volatility kind of scares you a little bit. And all it is, it sounds scary, there's stuff out there called historic, implied, forecasted. All I want you guys to do is understand the context of where volatility is, right? Because it's very important to figure out how to make money. And what we did was we created a scale. So we don't have to go and do the fancy math to figure out where volatility is. What we created was this thing called the vol meter. I created this with a professor that I went to business school with. And the vol meter, all it does is simplify and interprets where volatility is. Because if you know where volatility is, you can make really good decisions. And if anybody who's traded options before, you'll hear this stat. Joel, what's the stat? 90% of people who buy options lose money. And the reason why, this is my belief, is because they don't know where volatility is. Because if you know where volatility is, you know you should be buying options at certain points in time. And when you know where volatility is, you know you should be buying options. And we put it on a scale. And I'm going to tell you right here, 0 to 10. That's how easy we made it. And you know, right, that if you see a 6 and above, option prices are expensive, you have to sell options. So now it takes all the thinking out of like, oh my God, which strategy should I be using, right? And then if you know it's 4 and below, option prices are cheap, you buy options. Now this is like having a tool for you guys. Think about this. If you had a tool out there saying this 10 block radius, you know that when it's a 6, you are going to have an 80% probability of closing these sales. And or having in that area, if it's below a 4, you know that area is, you're going to have a 20%. Where are you going to focus more of your time? You're going to focus it about the 6, where you have the higher probability of success of closing that deal. And that's what this whole vol meter does. It is so damn simple, right? To be able to say, hey, 6 and above, I focus on this, 4 and above, I focus on that. So once you have that context, you're good. Now you have to, people ask me all this time, ready? Well, how do you know when to buy the stock or when to sell it? It's a great question, right? You never know when to get in and when to get out. Well, now you know what option strategy you're going to use because you have this tool. Now you have to put context around price. And how do we do that? Well, this is some of the questions I just asked. You don't know where a price stock is headed. You know where if a stock went up 10 points. People say to me all the time, Apple just went up 4% today. Well, is that big or is that small? How do we know? You don't really know until you put some context around it. So we created, or we didn't create it, it was out there already, but we use is this thing called, again, standard deviation. What's that?
I didn't in the last picture, he just looked so stressed.
He did look stressed, and now look at him. He's so happy.
That
That is exactly it. He saw his return already. But we use another mathematical formula, standard deviation. How many people out there get scared, you know what, of standard deviation? Does anybody even know what standard deviation is? When I first heard it, I had no idea.
I have PTSD from the stats class.
Exactly. Exactly. But again, what we like to do is we make math easy. And what I'm going to show you is as long as it stays, you can make decisions as long as it stays in between these lines or it goes way outside these lines. And here it is, this chevron. These, all this is on this chart. These are prices. Remember the closing prices and the open prices. And all we did is if it stays between the lines or goes above the lines, we know what to do, right? We teach how to use these lines with volatility. So when you have volatility, You have context around volatility. You know you're going to use what option strategy. Now, when it comes down to this part, you know you should be buying, depending on where the volatility is, you should be buying or selling. If it gets up to these lines, which happened, and we're going to show you an example. What we showed you an example is that it got up here, and we were able to put a trade on to take advantage of the down move. And in 3 days, the stock came back down to the line. And all it is using math, because the problem is I could have a hunch, or James Cramer or one of these famous guys on TV says, I think Chevron's going to 200. How many, you heard oil was going to go to 200, $200 a barrel. Well, our system was showing us that wasn't possible at that time. And we were able to put a trade on based on math, right? And 2 + 2 is what? Is that ever going to change? No. So being able to use math instead of hunches, or say, like you use candlesticks, you said, candlesticks are great to a certain extent, but I want to have something that's more concrete. And using standard deviations and using the volatility, the vol meter is what gives me the concreteness that I need. It's like, again, imagine having a tool that can pinpoint where you're going to be able to close more people. That's exactly what this does. So here's the vol meter score on that Chevron. You can see it was at a 10, close to a 10. So we know it was expensive. We should be selling options. So based on this, this is a chart. This is a chart. Oh, Joe, I must have threw a different chart in. Yeah. But this is a chart of the NASDAQ market. Again, right here, came to the top part of this range. You'll see on the next slide, volatility score was 7.75. We were able to sell the option. That was what the volatility was telling us, and bingo, we were able to make 24% on this in 6 days. So having the right tools to be able to make these decisions. So some of the questions that I get from people is that I don't have the time or the money to learn this. And I think a lot of you in this room, this doesn't really apply, right? Because when you start to make the money that you guys are going to make, it is so imperative. Because when I was your age, the mistakes that I made of saying, hey, I didn't want to deal, right, with learning how to do it, right? Because I did it every day for a living, right? Cost me so much money now that I look back. And that's what I want you guys to focus on, right? Is when you think you don't have the time, think about what it could cost you in the future, right? The mistakes that I've lost, giving that guy $600,000, right? That kind of money, what could I have done if I would have just had a system and a step-by-step process of being able just to make, let's say, 20% every month, right? Using the power of leverage and options to be able to create that kind of money. Or you take half of that money of the 600,000 and you're able to create 20% a year. And then you go out 10 years. That was how many years ago? That 12 years ago. How much more money would that be right now? So being able to, focus on obviously the things that matter, and that is protecting your capital. But here's some of the questions that I get. Can I really do this? Now, one of the biggest things this is one of the questions I get from everybody when I'm traveling. And my answer to it is, when you look at me, of course you can, because here's the thing. If you have those 4 principles that I talked about, you have the right education, that specific education. You have the right team around you. You have the right tools and resources, and you know how to use them, and you understand your why, you can absolutely do this. And then you have to ask yourself, do you want something different in your life? One of the biggest questions you have to ask is you have to step outside your comfort zone. You have to push yourself, because now, whether you're going to make $50,000 or you're going to make $200,000, that is life-changing money. And what do I mean by life-changing money? Is you can take that $50,000, right? So let's say that's the low end you guys make. You can take that $50,000 and you can turn it into $100,000. You can turn it into $150,000 if you're being smart with it. And then all of a sudden, it doesn't stop with what you can do. It's what you can do for your family, right? When I first started making my first million, I made my first million at, I think I was 23 years old and 24 years old. My family never saw money like that before. It was life-changing money. And $50,000 could be life-changing money for you if you understand how to do it. And then, are you willing to invest in yourself? I have a lot of people out there that say to me, yeah, they want to make a change in their life. They want to, they want to lose weight. They want to make more money, but are you willing to do that? And the only way you're going to be able to do that is by getting the right education, whether it's with me or someone else. My biggest fear for everybody in this room is to do what I do. And it's someone comes up to them because you all of a sudden you're sitting there with flush and cash. You really want to make money quick. And they got a great idea and you hand it over to them. And then all of a sudden that money's gone. And then you're like, oh, well, I learned a lesson. I'm going to do it again. And it happens. And when you say you don't think you would do it, trust me, I did it. I did it multiple times. So to me, the way you combat that is, again, those 4 principles. You get the right team around you. You have other people. You always go and approach other people saying, hey, I have this investment in real estate, or I have this course that I'm thinking about doing to learn about options. What do you think I should do? Right? And you go to multiple people and you make sure that what those people have a lot more experience than you do. And then the other one is you got to step outside your comfort zone. Now, I know a lot of you in this room have never heard this before, right? So a lot of this is, really important to be able to step outside that comfort zone and try something different and think outside the box. So how do we educate people? We educate people the same way I was educated on Wall Street. I took exactly how every bank on Wall Street educates their traders and their investors. And that's how we created a tactical income. I do get you educated exactly how I did on Wall Street. I sat behind a trader for 30 days and we had classes, right? And we had the right tools. And then I had the right team supporting me. So in that 4-month period, I was able to get that $45,000 check. So how do we do that at Tactical Income? Well, we created a Core 4 boot camp, right? So it is basically a live boot camp with Joel, who you guys met briefly over here. It's a 30-day experience, exactly what I did on Wall Street, right? I sat behind that guy for 30 days and then we had classes that, after the market closed and we learned kind of like what you guys are doing here, right? Understanding that. This is where you're going to build your foundation, your building blocks for your skill in this 4-week period. And it's doing it the professional way, the way that I learned. And in this course for the live option boot camp, we start, what is it? When's the next course, Joel, start?
Switch to the next slide. I think it shows it. Oh, it's next Tuesday.
Oh, next Tuesday we're going to do. So it's a 4-week live course with Joel. It's every Tuesday from 8 p.m. to 10 p.m. Eastern Standard Time. And don't give me this BS. Well, I'm not going to be able to make that. Well, you know what we do to do that? We archive it. So if you can't show up, you can watch it. And then hopefully you can catch a live class. And the only great thing about the live class is you get to hear Joel's funny jokes in real live time, live.
They're funnier live.
They are much funnier live. And then you get to ask questions. But it is a 4-week live course. And then here are some of the courses. Now, this is exactly what I learned, right? You get the wide trade options, directional versus non-directional trading, right? Because I want to be able to make money when the market goes up, down, or sideways. How to become the house. How do you gain that edge? I hope you guys walk away with that anything today, because that's huge for me. So we go through all this art of spread trading, right? You asked about how to manage your risk and how to use leverage. We talk all about this. Joe goes through this every week. It's 2 hours long and then it's intensive, right? But during that time, Zero to Trade in 21 Days on-demand video series. So the reason I created this is I'm dyslexic. So I learn differently. So I need to see stuff over and over. I'm a slow learner, right? Like I like to hear it live, but I miss a lot of shit live. So what we did was we created this on-demand trading supplement. It gives you have, what do you call them? Worksheets to work on. You can play it back as much as you want. And it goes through basically everything that we do in a live course, but then it goes in, just says it in a different way. So it reinforces everything what we're trying to teach you, right? I want you guys to learn as efficiently as possible and to get you, our ultimate goal is in 30 days to get you to trade live and start making money. I mean, that is the ultimate goal. I mean, who wants to sit there for 6 months and have to go through and be afraid? It's to have the confidence, right? That's the thing. Like when you start something new, just like, where'd he go? The guy who pitched. Oh, you're right there. There you go. I mean, it's his first time pitching, right? But you just learned it an hour ago. Now, we give you 30 days to have the confidence to be able to do that. And on top of that, we have this premium service. And what you're gonna do over that 30 days, right, is you're gonna get the trade alerts. So for 30 days, you're gonna see when I trade. So every time I place an option trade in the hedge fund, it goes directly to your cell phone. So while you're learning from Joel and you're using the zero to trade in 21 days, you're getting and seeing real time how this is all going down. So you get the trade alerts, there you go with my fund. And then you also get access to the volume, right? You get to see, again, and play with it. It shows you where to focus on, what stocks to focus on that give you the higher probability of profit and success. Then you also get the tactical income watch list. Now, this is something I've been doing for 20 years. Every Saturday or Sunday, I sit there and I go through and I put together all the stocks and asset classes that I'm focusing on going into the week. It was my homework that I used to do to prepare myself for the week when I worked at these, before I started my fund. Now what we do, and I put it together and my partner puts a video watch list together. So you get into all the work that people, say they have to do, we're doing it for you, right? And then what we give you too is that we give you access to the team, right? You need to have that support. You need someone there where you can call and you could be, or you can, email. And what we do is do these 2 training calls a week. We have one with Joel on Monday nights, and Joel basically works with all our subscribers, and you guys run a mock portfolio. So when you're asking questions in there, anything from, you say, if it's the smallest question you need to know, like what a stock is, he'll answer that. And you can actually just grow and see how all the other questions that everybody's having, trying to create a community, because our ultimate goal is to make people successful, right? We don't succeed if people don't make money. And that's one of the biggest things. And then on Thursday afternoons, which is everything again is archived. So if people can't make it, it is archived. You get access to me and my partner who helps me run the hedge fund. For 45 minutes to an hour, you can ask us anything. We go over all of our trades, all the trade alerts that we send out, if we sent out any. We go over the markets. And again, it's reinforcing everything that you need to try to be a successful investor and have the support to do that. And then lastly, you get access to our trading platform. So you asked, I forgot who asked about the different brokerages. Our platform hooks up to any of the broker, wherever your money is, hooks up to a bunch of those different brokerage accounts. So if you have your money at E-Trade or Ameritrade, you could hook the platform in. The reason I love our platform is we built it using our stuff, right? We have my scanners, you get access to everything's transparent. So everything I use in my hedge fund is there for you to use. My stock scanners that I use, you have everything that you need to be successful and to navigate the market is there. And that's what we're trying to kind of create with the Tactical Income brand. And then all this is for $397. Now that is dirt cheap. And the reason it is dirt cheap is because you could ask, you think, Gabe? Because usually we do this for $4,000. So that's when I go on these stages with Kevin O'Leary and Barbara Corcoran, we charge, I think, Joel, what is it, $3,990 something dollars?
Like that, yeah.
Something like
What
that.
I went to was like 20 grand,
Yeah, 20 grand. So that's the more,
like a university or something.
yeah, that was the one that we did. It goes all the way up, but this starting package right here,
Yeah.
is usually $3,997.
So just like the intro and then.
The intro. And then we have elite retreats, we call them, where you come and you get 3 days intensive, and that's what the $20,000 package was.
Okay.
So this is $397 of one-time fee, and I'm going to tell you what you get for that one-time fee. If you have the code is up there if you want to take a picture of it, but you get the 4-week intro to option course, right? Live on Tuesdays, and it's archived. You get the on-demand training, right? The zero to training that helps you, do that. But while you're going through that, what we're going to do for 30 days is give you, or you get the zero to training 21 days, is give you all the bonuses, right? And I call this a bonus because this is our premium service. Because a lot of people, to me, and Joel and I talk about this all the time, and you know this too, because you go there. A lot of people, the people have no knowledge. You have to go through the boot camp to build your building blocks. But there's some people out there that already know options. They don't want to go through a boot camp. So we have something a little more advanced for that. But this is our premium service for all of our students. And what we do is, Joel wants to say something. We charge $197 a month after you go through the 30 days. The $397 is the one-time fee for this. And then you get this for 30 days free. And then after the 30 days, it's $197 a month, but you can cancel anytime. There's no, if you don't like it, you know, you don't find it helpful, you just cancel, we'll just do it. Go ahead, Joel.
Just one thing real quick, I know I noticed a lot of you guys are already going to the site. If you're typing in tacticalincome.com/T4, you gotta include the www. I don't know why, but if you try and go without the www.
I wonder what that is.
I have no idea.
Yeah, I did it twice and it worked.
Did you? Yeah, you gotta use the www.
Yeah, so that's the whole thing. And then again, you know, to me, it goes back to a lot, the question that why I started all this. I was someone that had zero knowledge. And to be able to sit there and for those 4 months and be able to make the money that I was able to make blew my mind. And when I went back and I started to review that success in my life, I said, well, how could I make it easy and I always bring up my mom and sister because, you know, I have 3 daughters. So to me, I always want my daughters to be able to be self-sufficient. And my father died when I was at 62. So my mom's been on her own for a really long time. So how could you take the money that my dad left in this little life insurance policy and teach my mom how to be self-sufficient? God forbid something happened to me or my brother. And I think about this a lot. How do you create self-sufficiency? And it's being able to create that skill. I learned a skill on Wall Street that I believe everybody out there could learn. And again, it's breaking it down and it's using math. And that's one of the biggest things that I want you guys to take away from tonight is, hey, there is a way that is different from investing in any of the other investments that you might have heard out there, like or learning out there. And the other thing that you need to bring up too is that this is something that we do every day. So if I am sending out a trade, if Joel is teaching you, we do this for a living for other people. So it's not like one of these education companies where they're not putting their money where their mouth is. Every trade that I set up, if I sent out a trade to you guys and I lose and you lose, I lose. And I'm losing a lot more usually because I'm obviously managing $150 million to try to make money. So anyway, that's pretty much it. I would love to take any questions. I know we took a lot. I know I spoke a lot longer than I was allowed to, even though I go anyway. But if you guys have any questions or you want to talk, I know we have some pizza in the back. You could eat that, and if you guys want to go eat, and there it is. Well, thank you very much. I appreciate it.
Thank you. Thank you. Yeah.
Thank you. That was long.
Yeah, so that was awesome, though, man. That was.
Thank you.
Appreciate you, big time.
I got to learn how to talk quicker.
That was great. This was the best thing you guys could have been doing this time, I promise. And take advantage of it. And you know, at the very least, go think about what this could mean for you guys. Share it with other people. What we want to do with these personal developments is we want to provide value. Okay, that's really the only purpose here. If there's value in this for you, then take it to the next step. If there's not, that's fine. Don't do anything about it. It's totally up to you. But
So in 10 years when you're
yeah.
down the road.
But
remember that.
honestly, obviously Jeff does this because he wants to teach, he wants to provide value for others. He said that, but he wouldn't have come from New York for our little group if that wasn't the case. So give him a big hand. Thanks again, Jeff.
I got a question for you.
Yeah.
I know what's your advice on like being diversified? Like we're I don't know if it's bullish, bearish, getting into real estate.